Good morning, guys. My name is Rudo. I'm a full-time crypto trader for those that don't know. Okay, so we're going to talk about today when Bitcoin stalls, how to identify a stalling price action. And then when something stalls, you move into a lateral range, which is a sideways range. So I'm going to tell you how to trade within that sideways range. Okay, so the simplest way to quickly visually explain what it is I'm on about is when something moves up very nicely, we all tend to celebrate and enjoy the fact that our hodl bags, everything is doing well. But there's telltale signs in that last little wave that shows us the market is running out of momentum. And that's what I want to show you guys today. And when the market runs out of momentum, it often goes into a lateral range first, meaning it goes sideways first. And it's in this sideways condition that the market spends most of its time. So if you know how to trade a sideways market, you'll be profitable more often because the market tends to take a lot of time chopping, very little time moving up, and then chopping and a very little time moving down again. So the trending condition of a market is very short-lived. So it's important that you guys know how to trade that. Okay, so let's take away all this squibbles and let's have a look at the market. And let's bring back BTC, the chart real quick. Okay, so here we are. So Bitcoin has been, then you can clearly see the amount of time that it took in order for the last little trend that we had for Bitcoin. And this is now a 4-hour time frame. It took 47 days to go from 38,000 to wherever, 73,000. Okay, 47 days. So I can try and get it more precise for you guys, 50 days. Okay, but now it's been suffering and going sideways for what? 196 days. So if you don't know how to trade chop and sideways, you're going to be sitting out of the market for 196 days plus. Okay, and that's what I'm trying to get on. Now, the first thing that you need to know to identify when something is losing momentum, or the simplest way is called the candle overlap. Very simple. Okay, so when I look at price action, and I'm going to zoom into the past because the past is easy for me to just explain what it is I'm on about. When we're trending, you'll find that there's very little overlap between the candles. So I can make any of these candles bigger, and you can see if I put a fib on this candle, okay, and I'll make it a standard fib, 23.6 tends to be the area of support, and there's very little overlap between candles. So you can see this on all these candles, very little overlap. Okay, once you start getting big overlaps, this is when you need to start worrying. Okay, so telltale signs is you've got really big candles, but the overlaps are getting enormous. And that tells you that you're now going to lose momentum. So there you have a big candle, very little overlap, momentum still there. But then all of a sudden the body goes away and the overlaps are getting bigger, and some candles are starting to overlap the previous bull candles. And it's in this condition that I normally start saying to you guys, okay, hunt for divergence, take some profit. It's looking, it's looking like it's going to be grinding sideways for a while. Okay, so not to talk the subject to death. So if we move to where we are at the moment, the idea was that we were going to try and make a higher high. That's the main message for the whole of last week. The goal was simple. I just want to see Bitcoin go make a higher high. Now we've clearly lost momentum. You can see now that, up until then, we had really big blue candles, small orange candles. The overlaps were very small, looking at really strong trends. And now you've got big overlaps. Okay, you've got orange candles getting to the size, or orange or white, depends on how you want to look at define them. They are getting to the same size of the blue candles. So the momentum has shifted. Okay, so where we had strong bullish momentum, okay, now that's no longer there. Okay, so this means that we're moving into a lateral range, and the rules for trading changes when we're in a lateral range. Okay, now another way that some traders will try and identify this is they will draw a trend line from the bottom to the top and say, okay, well, break the trend, then the trend is over. But for me, that is sometimes a little too late, because now what about all this? you're missing out on all that chop. So I tend to not look at it in that way. So just, yeah, there's many ways to skin a cat, as they say, but for me, this is just too much of a time waster. Okay, so diving into a smaller time frame, let's leave the 4-hour alone for now. You can clearly see that there's still hope for more upside. Let's maybe just finish up on the 4-hour. I'm going to recant that. When we look at the important pivots on the 4-hour, we can kind of see that there was a demand zone created there. Okay, price went higher. Then we had our last little big demand zone get created there, but that's barely a pivot on the RSI. But I'll give it to it. I'll leave it at that. Okay, and from that point onwards, the RSI started trending downwards. So every time we go down, there's a pivot that gets created. And the hope is, if we've got hidden bullish divergence, remember, hidden bullish divergence is where price does not make a lower low, but the RSI does. Okay. And that is the strongest divergence. So if you've got hidden bullish divergence, your demand zones remain intact. Okay. So what do we have now? So we've got hidden bullish divergence there. I'm going to move demand zone in there. Then we've got another demand zone that got created from there to there. Snap it there. Okay. And then we've got another demand zone sitting right there. I'll leave that to price manipulation. And then from this point onwards, you had more demand zone being created there. And now you can see what we have is price, but we've shipped there. Price is barely hanging on to it. Now, like I said, closing prices higher, higher, higher within the demand zone. So this is still bullish, but the momentum is gone. Okay, so we're going to potentially, there's one of two scenarios that could play out, and this is now me predicting and doing a prediction for you guys, is that we can potentially do this for the next week or so until we get that higher high, meaning it could grind slow and people will get chopped up here. And that's why the trading needs to change now, because in this kind of environment where we potentially will still go get that higher high, you can see that the amount of gains are far less. If you sit on a position and you don't buy the outright, bottom, it's not that long, and then price will go and retest that bottom again. And that is typically what happens at the top of a move. So prepare for something like that. Okay, so how do I trade this then? Well, very simple. I go over to the time frame, the 4-hour time frame where I'm choosing to trade, and I'm looking at this and I say, okay, where did the first divergence occur? Okay, so if I were to switch back to the line tool, it's the simplest way to identify that for you guys. I use the pivot, I use there's a higher high, and I can argue that there's a pivot there where there's a higher high. Now, this is within a wave divergence, and this is wave against wave divergence. So this is more scalping environment, and then this is more of the larger time frame swing environment kind of scenario. Okay, so I'm going to use the wave on wave divergence, not the wave within wave divergence. Now, what do I mean by that? If that sounds a little crazy, well, simple. 1, 2, 3, 4, 5 impulse waves, typically what you will get. Wave within waves, meaning that there's a 1, 2, 3, 4, 5 there, okay? And there will be divergence there, as well as when we start going A, B, C, correcting, we will potentially have another move to the upside or some other, complex pattern forms that gives us another divergence at some later stage. So wave within wave divergence means that it could also be that we somewhere in here, and that price is still going to go make that higher high and then chop around a little bit longer. Now, there's one little trick that Elliott Wave teaches us between 3. So if this is a 0, 1, 2, 3, 4, and remember, guys, I'm at no point an Elliott Wave expert. This wave will never be the shortest. So typically, if this is the case, we will spend the most amount of time between 3 and 4. Okay. So that's learning how to trade in a lateral range. So if we then look at where we're at now, we've now created our pivot. We're starting to move sideways. This then defines where the divergences that halted all this momentum. And if this then defines this, I will use that as the upper end of my range. Now, Wyckoff basically labels this as the creek. okay? And then it will go and say, well, then the bottom will be the lowest point between these 2 points, between these 2 divergences. So it's going to be somewhere in there, and that will then be labeled the ice, okay? And then I will just adjust everything to the wicks so that it kind of just layers in the right position. And now I've got my lateral range clearly defined. Okay, so what is the rules for trading in a lateral range? Simple. Be bearish at the top, be bullish at the bottom, and not try and overthink things. Okay, so if you're bullish at the bottom, meaning at some stage the market might sweep all these lows, go out, come back in and test this range and then run, you're going to be in for the best entry. Okay, and if you're bearish at the top, meaning the market will go out of the range like it did there, come back and test to see whether this is truly resistance, you'll be in the best position for the short. Okay, now let's scale this back to the daily time frame, and let me just explain that to you guys there. Okay, so there we did exactly the same. So if you think about this area, if you shorted BTC there, you would be smiling. Versus if you were longing BTC there, you would have been able to take some good profit, but the rules change. Because we've lost momentum, we are now no longer looking at $100, $200, $1,000 of BTC. You need to shorten your trade horizon or your expectation or your profit margin for that. Okay, and that's it. That's everything that I wanted to share with you guys. So if we go back to the 4-hour time frame for today, what can we expect? Well, we do have nice big blue candles at the moment, but we've just broken through a demand zone. So it is basically the market kind of correcting its way back up. So I would rather, and the betting man is, look at a 15-minute time frame scenario where the market will start giving me divergence close to this red line at 64, and then I will hunt for a short. Meaning that if price is going to go down, that would be the most extreme highest point for that to occur, and then I'll target my take profit to at least the middle point of the range. Why? Because you will know that there will be a lot of opinions entering the market there. In the middle point of the range, this is when everybody has an idea whether it's going to go up. The general public or retail is too scared to buy the dips and too scared to short the highs. So they do all their trading within the middle of the range. So if you do take your short there, your argument is that you want to get out when their opinions come in, because it's going to take some time. The market tends to chop at those levels, as you can see. Okay, and then if it fails and it breaks through, then that will be TP2, and then TP3 I will hold for lower targets. Okay, that's everything, guys. Let's head over to the comment section. Let's quickly say hello to everybody. I see hello, Damon from Charlie 3. How are you doing, buddy? Tian is here. Hello, Tian. He was on holiday. I see he's nice and back. Mr. DM Photographic, how are you doing? Mart is always tuning in from Twitter. Thanks for joining in. Let's see what else we have. Aloha from Jewel, the beer hunter. How's it, buddy? Stanko is always so nice to have you guys. I have been away for a few days, but I kind of left Bitcoin with you guys when we were here, and it's done nothing. So from a trader point of view, you know, this is a scalping environment. There wasn't any good swing trades or anything there. And sometimes saying nothing is the best answer. Doing nothing is the best thing to do for trading. Because if we try and put too much value into each and every candle, we might overanalyze the market, and that does not do us any good. Okay, so this afternoon I'm going to be back. We're going to be looking at some spot crypto as well. And for those that have joined, there's already been a few guys. I have not looked at any of the tickets. And these are guys that's either now opened their own Prime account using my partner link, want to come join me in the Discord, or wants access to the buddy indicator, which you can do. So if you want to join that party, I'm going to go through those tickets and grant the access now. All you need to do is open your Prime account, guys. Using my partner link, you're going to get an additional 20% deposit bonus. You can come trade with me. So I had an okay month, not the best month. So there's a new month. Every 20th, I'm starting off a new month. I haven't taken a trade within the last week. So we're going to start kicking off with some new trades again. If you want to trade, when I trade, what I trade, where I trade, yeah, you know what to do. Head over to the Discord, links in the video description. Go to the navigation channel. And if you click on free trial, it will tell you everything and give you everything you need to know to join in on this with everybody else. So if you're if this is any one of you guys, don't worry, I'm going to hook you up now and I'll sort you out now. So there we go. To the Mars. Yes, let's hope this next bull cycle will be taking us to the Mars. So we'll be looking at BTC bigger time frame. What I can say, and this is my closing remark for you guys, is that, you know, from a CME side, there's no gaps. I like this. I really like this. I'm still bullish big picture. So between me and you. But it doesn't mean that we cannot spend a week or two here. And it doesn't mean that we cannot go and test the previous range support, which sits at 59. So even if we still go there, it's worth it. And that's why the trader in me does not have an opinion over whether I'm bullish or bearish. If it gives me the bearish setup, I'll trade that for as low as it can go. And if it gives me the bullish setup, I'll trade that for as high as it can go. That's all you can do. Guys, you have a lovely day. Thanks for joining in. If there's any questions, leave them in the video description, even if you're not watching live. And I will get to them in the next stream. Cheers, guys.
I'll keep hustling.
Subscribe now.